Hi friends, it's good to be back and back with a bang, because over the last 2 days that we have seen a phenomenal move in the global markets, and that has percolated into a significant move in the Indian rupee as well. Thanks to the Fed, the verdict from the German Constitutional Court also helped, and also a slew of reforms and hard political steps which the government of India has taken has definitely contributed to this kind of a move in the rupee. Let us summarize the key points. The first, the German Constitutional Court over the last week ruled in favor of the ESM. ESM is the permanent bailout fund which the Eurozone governments have constructed in order to finance the future bailouts in the currency union. So German Constitutional Court has rejected the appeal which said that the ESM was violating the German constitution and hence Germany cannot participate. So that plea has been rejected, and the interim order says that ESM can go ahead and Germany can ratify it. So that has helped the markets because that has removed one of the major risks in the Eurozone. The second, the US Federal Reserve along with the European Central Bank both have adopted an easy monetary policy. First of all, the European Central Bank, they said that they are ready to buy more bonds of the ailing nations like the Spain and Italy if their yields cross a certain threshold. If there is a panic in their bond market, European Central Bank is ready to intervene to support that market so that the investor confidence can remain. But they have put conditionalities on such purchases, and the conditionalities would be that those particular nations like Spain or Italy, if they want an intervention from the European Central Bank, they have to first request for a formal aid from the EU or the IMF, and they have to at the same time accept the conditionalities which will come from the EU or IMF and impose those conditions in their economy or in the financial sector. So as of now, Spain and Italy has not been too forthcoming about going ahead with any request for bailout, but that didn't matter because it was followed by heavy injection of liquidity from the US Federal Reserve, who has adopted an open-ended quantitative easing program whereby Federal Reserve will be buying $40 billion of fresh mortgage-backed securities every month. This is open-ended. This is something phenomenal because over the last in the QE1 and QE2, it had a particular quantum which was mentioned, and it was also had a particular duration over which this would happen. But this time the Fed has adopted what we term as a nuclear option, whereby the whole easing is, the whole purchase is going to be open-ended. They have said they will continue to buy $40 billion of mortgage-backed securities every month, and it's going to be unsterilized, so fresh money is going to flow into the system, and they will continue to do this as long as the economic conditions don't improve, especially the unemployment rate does not fall quite significantly, which means market says that the unemployment rate has to fall quite significantly for Fed to stop printing. So which all these things have contributed to the significant down move in the dollar, and we are seeing Indian rupee test levels of 53.70 over it happened in the morning itself today. We believe in the coming few weeks trend is going to be quite volatile, but overall the trajectory for the dollar would be downward. On the upside, depreciation in the rupee would be capped around 55, and it can even go and test the levels of 53. So 53 to 55 is what we are looking at over the next couple of weeks. So that's it. Thank you for attending.